Hello, everybody. Brian here on October 26th. We are going to go through some of the reports that I provide uh, in the Substack. It's really quite valuable. I'm going to show you Forex, crypto, and stock in that order. And that's the most popular set of asset classes. So let's take a look at the first one here being the Euro British pound. You can see it was generated here on the 25th of October. We get the summary, which is really just news, and the historical data, open, high, low, close. And then we get our overview of the chart, candlestick over the last year. And you can see the simple crosses, 7-day 14 average. Those are probably one of the most effective ways to trade those moving average crosses. And we get the forward rates. And then under that, we get the technical analysis. Now, there's a lot of different ways to trade technically. A lot of people have their own methodologies. My personal favorite one is this one right here, the Arun. Reason I like it is when you parallel the Arun signals with the technical analysis, you can see here that if we have our buy signal, which is the Arun up, you can see it started to go down just through here, and then it started to spike up. But the thing is, when it starts to spike up here, you start to see that that's a good time to get in. At the same time, you want to make sure that your Arun down is minimal at the same time as that your sell signal. That's probably one of the most reliable ways to trade from a technical uh, indicators perspective. All the other ones are fine with the Fibonacci, Bollinger, and whatever else you want. On top of that, we have the quant analysis techniques. There's a rolling mean and standard deviation, which is useful as well, where everything under one is normal for the standard deviation and all that fun stuff. And once it goes over that, I believe you have an extreme volatile situation. Kurtosis, I don't really pay attention to, but some people do. So it's there. So that is any Forex pair I can do. I can generate these pretty well every day, one a week. It just depends upon what volume people have. I'm only showing this because it's trending. This is a major Forex pair that's trending. Okay, again, this is Forex, British pound, and sorry, Euro, British pound right there. Okay, so there's that. And then the other one we can take a look at is we've had just a big bounce from Bitcoin. I think one of the most profitable crypto coins out there is Solana. And again, we get the news again. So this is Solana again generated yesterday, and all the fun news. And yeah, just all the news info that you want there. And then again, you can see how Solana's really moved up almost 50% since October. Well, let's just say here, since the 16th of October in a week, it's already gone up 50%. I put a call on that and it was correct. Historical data as well, 5 year, and so on. Sentimental analysis. This is good, positive on the FinBrain sentiment analysis. That's important if people want to follow that. Once it dips, that's probably another way you can track to see if it's worthwhile to hold. And once it dips, then yeah, that's the time you dump it and then pile on in again. Many different ways to analyze these pairs. Next one is we have the technical analysis. Again, simple moving average crosses usually work pretty good. You can see that there. Predicted that big move up. This one right here, big move up. This is a little delay here on the sell signal, but still got it pretty good. That's why I like these signals. Exponential might be your thing. Doesn't really matter. CCI, moving average, convergent divergence, so on and so forth. And again, we got the Aruns really good. You can see here that pressure here on the Arun signals doing pretty good. You can see right here, the Arun's gone down on the rune down and it's low. So this is a good time to hold it and just take profit. This may, and once it starts to spike, that's a time when you should probably look at lowering your position or even dumping your position entirely. I mean, I'm on Kraken, and the commission fees are very marginal for that type of trading. And if you're able to automate it, like I've already got set up on TradingView with a broker, or sorry, with any exchange you want, that's part of the power of what I've built out so far. So again, standard Bollinger trend line or Fibonacci retracement. Um, yeah, so there's that, and standard quant as well. Box and whisker plot. I don't really use that. Rolling mean again, standard deviation, and the kurtosis. If that's your thing. Now, okay, so those are usually the top two most popular asset classes is crypto and Forex. So that we've got covered pretty good. I can generate anything I want, but I'm only going to generate stuff that's actually trending and that's fairly popular and liquid. There's no point in focusing on currency pairs or a crypto coin that's not very liquid and a top pair right now. Okay, so let's go over the stocks. Now, just so you know, in a summary, that usually stock gives you the most amount of data. Um, One of the popular ones we're going to take a look at is Walmart. So right now, just as an example, I run scans pretty well every trading day. Right now, this is scanning right now over, it's going to be up to 6,000 stocks. And you can see it's going to filter out all the fairly volatile stocks, which is pretty well everything out there currently in the market with the market conditions that they are. A lot of pressure on the downside in the stock market. So as a result, I've only want to focus on low volatility, but it doesn't stop there. And I'm going to show you why. So first off, let me show you this one. This is Walmart. Um, Once I can get that properly loaded up. So here we are with Walmart. As I said, with the amount and maturity of stocks, you get the most amount of data available of any asset class. But right now, I don't really find um, stocks is kind of high risk to hold. It doesn't matter what your data says, just the way the markets are. I believe that there could be a correction coming, a big one. So I'm not sure if you want to hold it, but again, that's up to you because you have now the tools and the data available through these reports to show you what's good, what's not. And again, the only ones I'm showing you are the ones that are worth looking at. And two of these examples are here. So the first one, as I said, is Walmart. So you can see here we get our average price rating is above the closing price last 30 days. And we also have our fin brain, as I showed you, greater than zero point 0.1. So here we have our managers in Walmart. We also have listed, I'm not sure if that's very relevant for people, but it's there if they want. Fundamental, when I was writing for Seeking Alpha, it was the only way that they would rate um, stocks. They don't care about day trading. They didn't care about intraday metrics. All they cared about was just pure fundamental on a long-term basis. So another way of saying not day trading, but investing. So again, coming back to fundamental, we've got here the quarterly statements. These are the earnings, and this is current. Okay. This is what's important. It doesn't matter what a company reports. It also doesn't matter what the market conditions. In our case, it does matter because markets are highly pressured down. So what matters is guidance. So we go wherever we can find guidance. Some companies will not give guidance at all, or they may give 1 year's worth, but there are some companies out there still giving 5, 6 years worth of guidance, forward guidance, which is one way to see if a company is going to actually make money and have their stock price grow. If they're not providing forward guidance, chances are they're probably going to have their stock price either falter, like range bound, or just drop because they don't have the confidence. Because they know if they're going to put out guidance on something, that they will be punished at the time of when they're being measured. And yeah, you do get updates, but A lot of companies are very conservative, so they won't do proper forward guidance unless the market conditions allow it. So here we get the estimate, which means for Walmart, you can see it's here 604 billion, and then they expect still to grow another 641 until the end of next year, which is a very good, encouraging sign. This can be kind of important to major shareholders. You know about the ESG, where you get the BlackRocks and the Vanguards having State Street will have part ownership in these companies to make sure that they measure their ESG. But that's something that you may look at. I've seen some mid cap companies that don't have Vanguard or BlackRock. They're completely clean of that. But again, that's pretty rare. I think it's like 4 out of 10 stocks are not influenced or owned partially by BlackRock or Vanguard. Um, so again, we have our income statement. Again, past doesn't really matter, but it's there if you want. All the SEC filings with a quick link there. That's useful. Behavior analysis. So again, we get the holding sentiment on Finbray. Excuse me. That's helpful as well as positive sentiment based upon headlines in the news. This is the Google Analytics interest based upon Walmart. That's really you won't find anywhere else. And what are people interested in terms of interest on Walmart from a Google search point of view, based upon their different keywords search. So there's some of those. Same with these when it comes to Walmart. So you can see people are interested in laid around Walmart, Nokia stock, Palantir, so on and so forth. Then we have government menu. They don't have any activity with Walmart, or sorry, with the government. Obviously, this will be useful uh, um, for companies that are involved in, let's say, defense, military. So that might be helpful. We got some options because Walmart's a fairly heavily traded stock on the options market. You can see some good activity here. Put call ratio, that's usually a good sign right there of something. If you correlate it to something else, usually a stock announcement or any, any which way you want. That goes all the way back to 2022. Dark pool. Now, this is another unique thing you will not get anywhere else. Um, the thing is, when it comes to dark pools, they're not cracked at all. But here we got data sources that enable us to track that. So here you can see the position of Walmart continues to move up, but more importantly, right along here is the net positions overall of the major institutions, which could include pension funds, banks, hedge funds, the like. You will not see this anywhere else, unless, of course, you're paying thousands per month on Bloomberg or the like. But you can see here lots of people loaded up on Walmart because it's considered a good stock to hold while the market's been tanking for the last couple of weeks. So Walmart's a very good defensive stock. And how do I know that? Because my system that you're seeing here picks it up, goes through a bunch of other filters measuring, and I'm going to show you what we measure. And number one is volatility. So it's a very low volatile stock, but still somewhat performing pretty good. So here we've got price versus short volume interest. Here is where you want to see the short volume fairly low. You want fewer companies short in the stock versus long in the stocks. That's key. So you can see here it's evenly split, but the more longs, the better. Okay, unique information you'll not get anywhere else. Quantitative, again, all these box plots, if that's your thing. Targets. So people are setting targets. This is probably the most important one when it comes to from a visual perspective, and you'll see it in a data perspective from a different data source. But this measures right here the number of buys versus sells. So the more buys from institutional, not retail, institutional investors on their recommendations, you can see that there's more strong buys and buys versus the sell uh, strong sell recommendations. So that's another good thing for Walmart. Okay. Insider trading, no insider trading report. What that usually means is that if there's executives selling or buying stock, legally they have to record. Those are pretty good indicators on people that have stock options in the company, especially from a management point of view, that they have to either buy, they feel confident they're going to profit, or they're going to sell if something's going on where you'll they're in the know, right? That's why it's insider. That's the important thing of these kind of reports. I'm going to pull up one more here as well. And let me just see if I could find that. No, looks like I can't find it. That's okay. Okay, so there I am. New button, hot button from my recording software. Anyways, um, yeah, so I'm going to leave it that with a stock, but there's a couple of other things that we could take a look at. And these are the reports, PDF reports. So on Substack, you'll be able to download these and extract them. So there's and PDF and PDF and a self-contained HTML format. So continuing along with Walmart, uh, the fundamentals that are most critical are forward guidance, as I said earlier. As you can see, this report is very strong. Walmart feels strong enough where they're reporting for the next 5 years up to 2028, right here. Very few companies are doing that. I'd say minimal, maybe 1%, especially out of the big companies. So they feel strong enough that they will continue to grow from 604, 606, all the way up to 741 with a dividend as well. Not much, but that's not bad. But you'll do better holding probably Walmart stock because it's going up in revenue, and then you can also see the EPS goes up and so on and so forth. Their net profits going up as well. And this is guidance right from Walmart management as well. Very important, very strong. So that's volatility is my number one filter that I'm using on the scanning. As you can see here, that brings in a report of probably, in this case, it'll be 5,000, let's say, that are reported. I do my thing using filter for volatility, brings it down to maybe 20, 30, 40 out of thousands. And those are the ones you focus on. And then I run another scan that focuses only on strong guidance and strong uh, recommendations. Okay. So, as I said, with Walmart, you've got very strong guidance, really, really strong. At the same time, which is helps too, is that Walmart is doing okay on the recommendation front. 11 buys, 6 sells over the next month, and a sell recommendation as well over the next week. Okay, so usually we like to focus on everything with a buy, but between those two filters, those are pretty good. But so far, what I'm seeing with what I just showed you prior in this right here, that's a pretty good stock to invest into. Big name, largest retailer in the world that should be able to handle the recession pretty good when it hits, and or the downturn in the economy. So this is a good stock to invest into, buy and hold, invest. So that's one of the big things with this. So let me show you another stock that's been doing pretty good. It's obviously a small company. As the world starts to heat up with potential war, I found another company that got um, a pretty good, really strong guidance up to 2027. So this is a company called RTX. That's a stock, RTX Corporation. I've looked deep into this company. It's a $70 billion military defense contract that I'm sure you never heard of. Defense is going to be a big player over the next few years when the recession hits. So again, really good stock to have as an investment long term, I think. You can tell by the guidance. Look at the revenue. They see it to go up from 736 all the way up to 918. Dividend pays a little better, and then you're starting to get into your dividend at 3.59. But again, you'll get better performance holding it, the actual stock. But that's pretty good long-term investment. You can see here, EPS continues to move up along with net profit as well. Good, good, good stock to have as well. And then in here, this is what's even makes it even more attractive. Few sell recommendations, but some strong ones, and especially strong buy. So you could get a metric on. You don't want to hold this intraday, as you can see by these time periods, but long term, it's probably a pretty good stock to have. So how do these stocks do? Let's check it out on Walmart or on Finance, Yahoo Finance. So if you go to Yahoo Finance, let's put the first one in, RTX Corporation. There you go. Markets were fairly negative all week. If I show you Market Watch, let's say the S&P 500, right? So if I look at the S&P 500, you can see here that comparatively that these stocks are doing fairly well that are picked and displayed in my Substack. It's like stock picking. Year to date, it's only down to 7%. 5 day, 3% down. Shut up. 1 month, 3.7, and 3 month, 8.82. Okay. So when you look at RTX, just alone 0.78% today, pretty good. 5 day, looking pretty good. That's probably a stock report, and it just bumped up from 71. So it's almost gone up 10%. 1 month, year to date. Obviously, not a good time to hold it during this period, but once we pick it up, you could see it's starting to do pretty good. From 66 to $79, I'm probably going to move up continuously from there. So it's a great stock picking tool, what I'm showing you. And if I show you Walmart as well, um, not so bad. I wouldn't be proud of that down move, but what can you do? 5 day move, it's still pretty positive comparatively to the stock market overall. 5 day, not bad. It has dipped down a little bit. 1 month, eh. Year to date, it's been pretty strong. 130 to 161. If you were to compare that to Nvidia and the Magnificent Seven, they've taken some pretty big hits, but Walmart's still doing pretty good year to date. So that's it. So those are the files. Those are the the PDFs that you get with this service, Substack. For what you pay and what you can comparatively pay, all the work's done for you. You just got to dig deeper using our stuff or use your own methodology. But the stocks are usually really good. Solana, crypto, pretty good picks if it's performing, and same with Forex. If the markets continue to move down, I do feel that the markets, Forex will still kind of perform in worst case scenario on top of also I should mention I can also do ETF as well Let me see if I can pull up an example of that. So yeah, we also do show some of the performers on yeah, here, pull up the proper Excel. Okay, so here comes Excel. And so you'll be able to track by sector what's doing pretty strong. So here are your top performing ETF. The unfortunate problem with ETF is that there's not a lot of info you can get from ETF. So you get here the 5 day returns on the 20, 50 day. And again, when I mentioned the Arun up and down, so we prefer to have 100 Arun and as low as possible our Arun down volume or volatility metric. Zero point 0.4 or lower is better, and the closing price per share unit. That's pretty well it. So that's the ETF performance as well. And you can easily figure out what are the performing ETFs and sector as well. Other than that, thanks for watching. Have a good day. Make sure you get on my get your free tech book as well. Some tech tools there. Thanks for watching. Have a good day.